Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. All right, this is going to be short and sweet. It's about 9:22, so you'll probably watch this after we open, but it'll be fine. This week is focused around two things. You've got CPI tomorrow morning. You've got the Fed Wednesday at 2. So you're going to have the market before those numbers, in the middle of those numbers, and after those numbers. So we're consolidating now. You can see it on the daily chart. You got the 50 here and the 100. Haven't been able to take either one of them out. You got the 9-day and the 20-day 200s there. So we're just kind of jammed in. We've shedded some of this price, and you've just got all this consolidation. Little false breakout. They wound it back. They haven't really tried to knock it down, but we're just kind of, we're hanging out here. Bollinger Bandwidth is about 4.6, so nothing, terrifying, but it's tight, okay? In an environment where the Bollinger Bandwidth for the majority of 2022 has been somewhere between 8 and like 15, and generally hovering in and around the 10 area for the majority of the fall. This is a little tighter than what we can see, and you can see it down here on the Bollinger Bandwidth chart, which I'll make a little bit bigger for folks if I can drag my mouse properly, so you can kind of see where it's falling off a cliff here. So we'll see what happens. And on a Monday, you would expect some chop, you'd expect some whip, and they're going to put this thing on a shelf. They're going to put it on a shelf into CPI, see what happens. Then they're going to put it on a shelf into the Fed, see what happens. And then after those two unknowns become known, it'll probably get a little looser with directional price, as we get into the back end of the week. So it could go a different way. Usually it goes that way, and I'm very big on expecting the expected. Hourly chart, got new weekly pivot. These are March numbers. We rolled into the March contract this morning. 4,005, spot 92 on the weekly. Monthly's 96.17. And then you can see the 20, you can see the 9. Complicate that with the weekly and the monthly, and you got a whole lot of overhead resistance on the hourly that the bulls are going to have to deal with. What do the bears have to deal with? Deal with the 100. Get it done. Get it done. It's there. Get it done. You were there here and here. This is the gap. So whenever we roll, the charts get a little bit screwy. I use a continuation chart on my hourly because it's just over the vast majority of the year, with the exception of the few days in and around the roll, it's the better way to go on an hourly chart. So the reality is you got all this overhead stuff here. You got to deal with it. All right. Volume weighted average price, VWAP 39.7068. So basically, hourly mid is 71, VWAP is 71. You've got 5-minute mid and proprietary moving average are sitting up around 80. So 71 to 80, 79 to 80 is going to be important off the open. Expect it to be whippy, expect it to chop. Everybody's got to kind of, find their feet here, on a Monday morning. And yeah, whip and chop. You'd like to see it make up its mind into the middle of the day. But then there's a point where they're going to shelf it and wait on CPI, because that's just the, you want to talk about the 800-pound elephant in the room. I mean, it's CPI. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room. Back tomorrow.